We are going to be talking about psychology in the stock market. Psychology. This is going to be a little bit of a different lesson than probably what you're used to. I'm not going to be going over a support and resistance lines. I'm not going to be talking about what's the best indicators. I'm not going to be talking about volume and different mathematical algorithms. I want to talk about the way you're thinking about the stock market and see if I can change the way that you're thinking in the stock market. Psychology is such an awesome topic because it almost gives you like a superpower on how you are able to read the market. So let's break this down into a way that every single person can understand. What is psychology? Well, psychology is the scientific study of the human mind and its functions, especially those affecting behavior in a given context. Now, what would be this behavior in a given context? Well, it would be our emotions and how we react to the stock market. So if I can be able to understand myself better, or maybe you better, or maybe this trader better, I can be able to understand the market a little better. Because why do stocks go up? People buy them. Why do stocks go down? People sell them. So if I can understand why people like a certain play or why people dislike a certain play, and then I can correlate that information and put that somewhere else and say, okay, what about this ticker or this ticker or this ticker? I could be able to figure out if it is going to go up or if it's going to go down. So we are going to be studying our minds and other traders' minds on how they are going to be affected in the market. And it goes with sociology. Sociology is the study of societies and how humans act in groups. Sociology is a social science. So what we have here is a group setting. Not only what am I thinking, what are they thinking, what is he thinking, what is she thinking, but what is that group thinking? What is that entire Discord community over there thinking? What is all of StockTwits thinking? What is all of Twitter thinking? What is everyone over here thinking? Because remember, if I can think about it as a majority of a group, and think to myself, what does that majority want to do? Oh, 90% of them like that play. Well, that means they're going to buy it. And if that means they're going to buy it, it's going to go on up. So now we're not thinking about the actual stock. We're not thinking about the actual company. We're thinking about, are people going to buy a certain play and invest based off human emotion? Are we going to see them feel like they're getting FOMO, fear of missing out? Are we going to see them basically jump into a play because everyone else is jumping, basically peer pressure them in? Are they going to jump into a play of greed? Or are they going to sell because they're fearful? Sell because there's a bad press release? Sell because someone told them to sell? We could see an entire play shift from one way or another, depending on news, depending on what traders are talking about, depending on influence. So psychology, study of mind; sociology, study of everyone's mind. And that's why it's so important, trader, to be able to understand this topic. Because when you sit down every single day, in the morning, when you turn on your computer, you probably say to yourself, all right, let's see what the best play is today. All right, let's see what the best stock is today. All right, let's see what everyone's looking at today. That's the wrong way to be able to trade. You should not be saying, what's the best stock today? What's the best stock I like today? The real question is, what's the best stock everyone else likes today? Because I might like a stock, stock XYZ. That's the stock that I like. But what if 99% of other people don't like that play? Well, that means there's no volume. That means there's no action. That means there's no activity. Why would I want to play a stock that has no volume? When you hear a play or someone say, I have a super secret stock, you don't ever want it. I don't want your super secret stock. You know why? Because super secret stocks means no one's looking at it. There's no attention towards it. There's no volume towards it. There's no activity towards it. There's no predictability towards it. Super secret plays means no one's on that play. I want to be looking at stocks that have some attention that could get a lot more attention. I want to be looking at plays that have just gone on big time spikes and either they're going to become great shorts on down or they're going to be plays that are going to continue on up. I want to be trying to get ahead of that group of traders. So how do these two mix? Stocks move up from us. If a trader buys a stock, the stock moves up. If a trader sells the stock moves down. It's not what you are going to trade today. It's what is everyone else going to trade today. So the number one way that we like to think about this, traders, is we want to think about volume. Volume, we've done lessons on volume. Volume equals activity. Activity equals profit. The more that traders are trading, the more volume we have. The more volume we have, the more movement we have, which means there's going to be more emotions. That could be fear, that could be greed, that could be, whatever. But there's going to be more emotions, and emotions is what really pushes the market at the end of the day. So this is how we think about it. I think about this in a term called the mob. The mob is just a term that I made up. It stands for the majority of buyers, the majority of traders that buy anything that moves. Over 70% of traders will fail and less than 30% of traders will succeed. We all hear about this stat. Sometimes traders say it's 80% of traders are going to fail, 20% are going to succeed. Can we just take a second right here and talk about this stat for a second? We have probably all heard this. All right, 80% of traders fail, 20% of traders succeed. And that sometimes makes people say, oh, I don't want to start trading. Well, why not? Well, only 20% are going to be successful. That means 2 out of 10 are going to be successful. You know how big that gap is? This stat, the fact that that stat goes crazy it's so mind-blowing to me. Do you know less than 1% of basketball players make it into the NBA? Do you know less than 1% of college football players make it to the NFL? Do you know less than 0.5% of people who move out to Hollywood or LA to try to be on a big screen movie actually ever get any sort of movie part whatsoever? Do you know less than 6% of applicants that go to an Ivy League school actually get accepted? And you're telling me 20% of people succeed in the stock market? All the stock market comes on down to is who's willing to put in work and who's not willing to put in work. If you don't want to lose, you just have to take the necessary steps. Remember, we've talked about the necessary steps before. The necessary steps are to paper trade for at least 6 months. Paper trade to gain experience. Then slowly build up a tolerance. Build up a tolerance where you are doing smaller shares each week until, again, your emotions catch up with you. You don't just do 1,000, 2,000 shares right away or 200 contracts right away. You slowly build up to it. We paper trade for 6 months. We do small contracts or small shares for 6 months. We watch video library lessons. We watch the live stream every single day. We record ourselves trading. We take notes. We talk about good habits, our bad habits. We have to take about a year before we're successful. You know why 80% of traders lose? It's just because they say, hey, I want to make money. I saw that guy on TikTok make money. Hey, okay, open up a Robinhood account with $2,000. Oh, man, I don't know what's going on right here. I'm going to buy this stock. This guy on Reddit told me to buy it. Okay, oh, man, I lost all my money. Dang it. It's like, that's where the 80% comes. 2023, we're full of laziness. There's so much laziness. It's so hard to be able to find people that actually want to work to be successful, not just given success. So to be in the 20% of stock traders isn't as difficult as you think. It just comes down to, are you willing to work to be in that 20% of stock traders? The 80% is what we call the mob. The 80% that basically is just running around with their heads cut off, just trying to buy what everyone else is buying, that's the mob. Now, I was a part of the mob at one point, and you were part of the mob at one point. You may still be a part of the mob. Ask yourself a very honest question at this moment. Are you a trader that actually fully understands what's going on in the stock market? Do you have the same education and the same knowledge that I have? Do you know why I jump in on certain plays that I do? Do you know how I find the certain plays that I do? Do you understand everything when it comes to float and volume and indicators and entries and exit and support and resistance and looking at past chart history pattern? Do you have that experience, or are you just saying to yourself, well, whatever they buy, I'm going to buy. Whatever deck buys, I'm going to buy. Whatever, again, they talk about, I'm going to talk about. Be honest with yourself. You don't got to lie to me. It's not going to help me at the end of the day. Be honest with yourself and ask yourself, am I part of the mob? So what's the mob? The mob, I always give this example. In the movie Finding Nemo, we probably all saw that when we were kids, or younger at least, is, there's this big flock of seagulls, like 100 seagulls. And all they do is chase the same fish. They just sit there all day. They just sit there on a wire. They sit there on a building. And all they do is they see a fish and they all go, mine, mine, mine. And they all go flying in and chase that fish. Then once one of them gets the fish, they all sit around and they all just wait for another fish. And then they all go, mine, mine, mine. And they all just go flying into that one fish. They're all just chasing the same exact thing over and over and over again. That's all they do. They just chase and chase and chase and chase. Basically mindless animals that have no idea what's even happening in the real world. So that's what we have with the mob. There is a huge group, the majority of traders, that have no idea how to trade, have no idea what's going on in the stock market, but they wait for a stock to go on a very big spike, and then they end up buying into it, which is why they always end up losing. So I'm going to give you a visual demonstration here on how the mob always loses and why you might be part of the mob. Let's talk about this. The mob right here. We have a normal breakout. We have all these different areas that we can buy into a stock, all these different areas that we can be able to get involved into a play. And you know what? At this time, some traders may be able to find the areas of success, but a lot of people are not going to find that area of success. So let's talk about all the areas of successful trading. First area that you guys can be a successful trader at, you could be part of the 2%. The 2% is going to be early swing traders. This is going to be someone who either, let's say, has been watching that company for the last few weeks, has done the extra research, has gone through the FDA calendar, saw that they had upcoming news, jumped in a little bit early, saw that this news is going to be coming out tomorrow morning, wanting to have a good position, did their research, did their background, have again a game plan, and they jumped in. It's hard to be part of that early swing trade where you are nailing the absolute bottom before a very big run-up. So where do most traders end up getting involved into a play? Well, most traders are going to most likely be getting involved in somewhere probably around that breakout area where we might wake up early. We see that news is coming on out. We see that a stock is gaining some hype. We see that we have higher lows. We see that we have a very nice breakout right here. And there's going to be a lot of successful traders that are having the confidence to pull the trigger. So we have our traders that got in early. We have the traders that are now pushing the play on up because they see that there's hot news. They see that there's good volume. They see that there's a lot of attention towards their play. So they're taking advantage of it. And then here comes the mob. The mob are the people that wake up late. The mob are the people that see a big time spike. And after they see a big time spike, they're saying to themselves, oh, here's a big time spike, guys. Look at it. Look at this big time spike. This is so awesome. And then guess what they do? Since they see a big time spike, now they feel confident that a big time spike is happening since it's already happening, and they buy in all the way at the tippity top right here. Now, guess what happens? Since we are now up 100, 200, 300% on the spike, well, the early swing traders, they say to themselves, hey, I'm happy with my profit. I'm up 200%. They start selling. We also have shorters. Notice this big, long upper shadow. Shorters jump in on the party, and the shorters say, hey, I want to get involved on this. I'm going to just start jumping on in. Makes the stock start going on down even more. We start having our breakout traders. Our breakout traders say, yep, time for me to lock in our profits. I'm locking in right here. So guess who won? Anyone in the blue? The early swing traders. The shorters are going to start winning. Breakout traders get a little bit of a profit. And guess where the mob is getting out? The mob is getting out at the bottom. And you see people post the big profits over on TikTok or StockTwits or Twitter or Discord or wherever. You see, traders say, yep, made again $500. Yep, made $2,000. Hey, just made $20,000 on my short. And then you always get those people that always go, what the heck? What the heck? Every time I buy, I lose. Are you guys ready for the stock to drop? You know why? Because I'm about to buy it. I'm about to buy it, and since I'm about to buy it, it's going to go on down. There's something, someone's watching me. Every time I buy a play, it goes against me. Am I personally victimizing you at this moment? Am I feeling like I am talking to you exactly? Are you the person that every single time you buy, it goes against you? Well, wake up. You're part of the mob. You are part of the mob. And you know what the mob does? The mob is just buying in late, and all you're doing is paying out the early swing traders. You are pushing up the play with your profit so that the breakout traders can sell and take your money. So early swing traders, they get in, you are buying their shares, they're getting out. Early breakout traders are getting in, you are buying in, their shares are giving to you, they are getting out. They are taking the profit, you're buying it at the high, shorters move in, everyone makes money except for you. You know why? Because you waited for the spike to happen before the spike happened. You waited for the spike to happen. So now you have a very big spike, and you're saying, yes, a big spike has happened, but the big spike has already happened. It's a very weird circle of stock trading that you must understand here. Once a big spike has happened, it already happened. You can't buy at the top of a big spike and just hope that it's going to be going even more. A way that I like to think about this a little bit more is a lot of times people are scared of flying, going on airplanes. Imagine if you bought a ticket and you start saying to yourself, all right, I'm a little bit nervous. I bought my ticket, but I'm a little bit scared. I'm going from, New York to Florida. I don't know if this plane's going to make it. You know what? I'm going to wait until the plane goes to Florida just so I know it's going to work. The plane leaves without you, goes all the way to Florida, lands in Florida. They say, yep, the plane landed in Florida. And you're saying, yes, okay, that's a good plane. I'm ready to go. And they say, sir, the plane's in Florida. You missed your flight. Well, can I get a refund? No, you spent for that plane in Florida. The plane was here. You didn't take it. And now again, it's in Florida. You missed out. You bought a ticket for no reason. You have a very big spike. You are scared to buy in on the spike when it's starting to spike on up. But now it's up 200% and everyone's making a ton of money. Now you want to buy into the play. So you're buying it at the very top, which all your profits are paying out the people underneath you. And now the stock dumps all the way back on down. And you know who makes money? The shorters, and also people who are getting in on a nice little dip buy. The dip buyers are now making money. So guess what happened? Dip buyers are now making money, right? Dip buyers are now making money over on this play. Now the stock starts breaking out again. Breakout traders start buying in on that stock. Breakout traders start buying in. The mob is saying, what the heck? I just got out of this play. Now it's breaking back on out. I got to get in on this play. Now the mob jumps back on in, and guess what happens? Dip buyers are saying to themselves, hey, I'm a happy camper. I just made my money. I'm going to lock in right here. Then again, anyone who bought in for the breakout or the dip buy, they say, yeah, I'm going to lock in right here as well. And now anyone that's part of the mob is saying, every time I get in on a play, I lose. And then they lost their first time right here. They lost their second time right here. And then right when they're about to get out of the play and they get out of it and they lose, guess what happens? We go on a very big spike again. And that's where there's starting to be some, fists thrown. Now things start getting a little bit crazy. So if you are a trader that is constantly losing, I'm sorry to break the news to you, but someone has to do it at some point. But you're part of the mob right now. All you're doing is giving your profits to other people. Not trying to offend you, not trying to hurt your feelings, but I'm trying to give you a wake-up call. You're part of the mob. And all you're doing is just giving your profits to people underneath you. So you have a big question right here. You have all these different areas that you can be successful. You could be an early swing trader. You could be a breakout trader. You could be a shorter. You could be a dip buyer. You could be all these different things. The only thing you can't be is chasing at the very top. That's the only thing you can't do. But that's where the majority of people do it. That's where the majority of people end up getting involved on these plays. But you could be anywhere else. But most people end up getting involved over on this plays because it's one big psychological game. That's all it is, guys. It's one big psychological game. So you say, Deck, okay, I want to stop being part of the mob. How do I stop being part of the mob? Well, that's where it comes down to strategies. You can be that early swing trader. It comes down to putting in the work. You could be that breakout trader. It comes down to putting in the work. The shorter, the dip buy. Well, Deck, I want to be a dip buy trader. Okay, awesome. Let's wait for spikes to happen. Let's look at support lines, find the best area of support, have good stop losses, be able to get in and have confidence to pull the trigger at support. Okay, Deck, I want to be a shorter. Okay, let's wait for upper shadows. Let's wait for big time breakouts. Let's wait for that reversal and be willing to pull the trigger. Hey, I want to be a breakout trader. Okay, let's go ahead and look for higher lows and breaks of resistance. Have a game plan. Not just, oh, I'm going to buy this play because everyone's alerting this play right now. That's where you're part of the mob. So how do I get into that top 20%? We have to be an early swing trader, a breakout trader, a shorter, or a dip buyer. We have so many places to be successful, but yet the majority of traders lose. So how do I do this? Well, you study, you gain experience, you do the work. We need to think like the mob and then be one step ahead of the mob. So many people ask that question, well, how do I be successful in the stock market? It's not a secret. There's no secret behind this. Guys, how do I get a great body? You want to have a great body? It's not that difficult. The answer is straight ahead of you. Hey, eat right. Have fruits, have vegetables, have your proteins, have a little bit of carbs to gain your energy, and go to the gym. Go to the gym 5 days a week. Be there for about 45 minutes to an hour. You're going to be coming out jacked. It's literally impossible not to look good or not to lose weight if you are eating right and you go and do a gym program. It will be impossible for you to just randomly start putting on tons of weight if you're following that program. Same exact thing. If you're following the program of, I'm going to paper trade for at least 6 months, then I'm going to build up my tolerance. I'm going to record all my trades with a webcam and myself. I'm going to study the video library lessons. I'm going to ask Deck questions. I'm going to take notes. It is impossible to be constantly losing over and over and over again. The only way you can do that is if you just keep falling into your way of emotions and greed and old habits. That's the only way that you can be able to fall apart into that. We have to be one step ahead of the mob. We need to make sure that we are constantly, getting ahead of the mob. How do we get ahead of the mob? Well, we look at pre-market. Pre-market, we look for those hot press releases. We look for the stocks that are going to be extremely appealing to other traders. Where are other traders saying, oh, wow, that's going to be great? We look at top gainers on the day. Where are other traders going to say, wow, that's a top gainer. I want to jump in on that right away. Where is the hype? Right? That's what we're constantly looking for. Where is the hype? Where is the momentum? The 20 count DeckMart trade strategy, it's a nice little strategy that everyone can be able to use. And it just comes on down to how do we know where the hype is every single day? Look at the high of the day momentum scanner. The high of the day momentum scanner, traders, is really going to tell us every single morning where the mob is going right at the start of the day. So it's not going to go all the way back towards the time of 11:30 in the morning because it's almost lunch hours now. But what can you guys realize out of this? You can realize that we have our time, we have our symbol, we have our price, we have our float, and then all the way to the right, we have our counts. In the first 10 minutes of the day, first 10 minutes only of the day, you will have 1, 2, 5, 2, 3, 1, 2, 5, 6. Whatever gets 20 first is going to have hype and momentum. anything usually even past, the first 10 minutes, 30 minutes. Once you start getting over a 20, it means it has 20 new high of the days, which shows us that these obviously have the mob at some point. You see COYA, 60 high of the days. Obviously, COYA had some hype and had some attention. We can keep scrolling on through. I mean, we have GDC, obviously had the mob at some point right here. GDC had a lot of hype and had a lot of attention. A lot of traders are focusing over on GDC. So this was a play that a lot of people have been focusing on. Right? So you can see where a lot of this hype and momentum goes by looking at the high of the day momentum scanner, and especially right at the start of the day, we can see right off the rip where that focus, where that hype, and where eyes are looking for these plays. So it is extremely important to be watching every single day that high of the day momentum scanner. I live stream it every single day so you guys can see where a lot of this momentum and where a lot of this action is going. So we need to understand how the mob works in different market conditions. Not every day we can just wake up and we can say, oh, okay, this is going to happen, or oh, this is going to happen. Traders, the mob is going to move based off of market condition standards. So on days that we are seeing massive low float spikes, remember, 2 weeks ago, every single day we saw supernova, that's going to set in traders' minds. If you miss a supernova one day, traders are going to say, well, I want to get the next supernova. Oh, wow, this stock is spiking. Do you guys remember yesterday when that stock went 500%? I want to buy into the stock because I know it's going to go 500%. Traders make the conditions. We make the conditions. When we have a 500% spiker on Monday, there's usually a 500% spiker on Tuesday, which usually leads to another like 300% spiker on Wednesday, which slowly dwindles on down. But it's because the reason why we go on these like packs of breakouts is because everyone says, wow, that was huge. I want to find the next one. I want to find the next one. I want to find the next one. Do you guys remember when meme stocks first took on off, where obviously we had GameStop and we had AMC, but we also had 12 other ones where it basically like GameStop went nuts, and again AMC went nuts, and then we saw like WKY go nuts, and we saw MULN go nuts, and we saw all these other ones because everyone was like, oh, this is the next GameStop, this is the next AMC. But once that dwindles on down, then again the mob starts looking around saying, is there anything big? But also, let's reverse this. If there is no play on Monday, there's sometimes no play on Tuesday, because traders are saying to themselves, there's no play on Monday, I'm a little scared, I'm a little bit nervous, I'm a little bit disciplined. What I'm trying to get for you guys is, if there's 100 people in the stock market and 99 of them are saying, I'm scared, I'm nervous, I don't want to put myself in a bad trade, you don't want to be the guy that comes on in and says, hey, I'm putting my whole entire account on the market today. Because guess what? You're 1 out of 99. That means your money is just going to be sitting out there when no one else's money is going to just be sitting there. So you have to understand the mindset behind traders. What are the market conditions? So when we take a look at what are the market conditions right now, what would you guys think? Well, we're seeing some decent spikes, nothing too crazy. But when I take a look over on, let's say, the top gainers on the day, I see GDC, big time spike, now starting to give its gains on back. I can see MICS, big time spike, gives a lot of its gains on back. I could see, ONCS, spike, gave it gains on back. It seems like every single day we're having our morning spike, and then it gives its gains on back, and then it's basically dead, a lot of times. We can also, again, think about that for the S&P 500. The S&P 500, if we take a look over on the S&P 500, we haven't had much movement in the last 1, 2, 3, 4, 5, 6, 7 days. The last 7 days or a week and a half, we haven't really moved in a strong manner. You could see big green candles back here. You see big red candles here. But over the past week and a half, all option traders have been take profits quickly. Don't hold very long. Take your gains when you have them. And that's kind of what it comes on down towards. So I want to make sure that every single trader understands that. I want to make sure that you guys are all aware of these plays. So the mob. The majority of traders, I want every single trader to start thinking a little bit differently at this moment. Going over this, I want you guys to wake up every single day and start thinking and ask yourself, okay, I want to start thinking about not only chart patterns and what's the best play, but I want to think about it in a larger group. There's 100 people in the stock market. Let's think about what's their favorite play today. If their favorite play is my favorite play, that's great. But if my favorite play is not their favorite play is now my favorite play. That's the one I want, because I know volume is going to equal activity, and activity is equaling profit. We know that the mob, the majority of buyers, are going to be the people that are always late and just pushing up plays higher and higher. They're like this flock of seagulls that are just waiting for that fish to come on up. We know where we can be successful, and we know where we can't be successful. So let's get out of that 70 or 80% that just constantly loses. Let's focus on one of these strategies and really master it. So we have to understand that the mob is going to work by following the hype, following the momentum, and different market conditions are going to give us different results. Ladies and gentlemen, awesome job. Psychology is huge in the market. Think about not what's the best play, but think about what is everyone else like every single day. This is a great way to be able to think so that you guys can be one step ahead and correlate it to your trading. And I think that is absolutely awesome.